Hey guys, what is happening and welcome to this video. So in today's video, we're looking at how to identify a stock, and in particular, we are looking at how to identify if a stock is a bubble stock or it's a hype stock and whether it's worth investing our money in that. So anyway, guys, please smash that like button. I've got some issue going on with my camera. So my camera's been overheating. So what I had to do prior to this video was stick it in the fridge. So it's pretty cold, and I'm hoping it'll film this one because I filmed this 3 times and then I go look at the camera and it overheated like halfway through, and I'm like, great. So please smash that like button for this, and we're a small channel, so subscribe if you're seeing this. Smash that like button. It really means a lot and helps the channel. So we're going to jump into the computer now, and we're going to identify how we can tell whether things are bubbling or not bubbling. And guys, we're going to talk more about risk management and how to protect yourself against this sort of thing happening. And risk management is one of my core things when it comes to investing and trading. I do short-term trading, so most of what I do these days is just short-term trading because I believe everything is at all-time high price and I simply don't want to invest. One of the core beliefs we need to have as investors is you need to be getting a deal on it. Otherwise, why are you buying it? Because if you're buying it just based on the fact you think the price is going to go higher in the future, it's just speculation betting. So without further ado, guys, let's jump into that computer. All right, guys, so here we are in the computer. So we're going to go and I'm going to pull up this stock, which is F-Cell, okay? Fuel Cell Energy. So basically, we're going to take a look at this stock. This is a good example. There's another one called Plug as well, which pretty much followed this stock when they both kind of tumbled and went down. And they've had big increases, big declines, and they sit a little bit higher, well, a lot higher in some cases, than they were before. So, I mean, if you are actually in the stock beforehand, before the bubble caught on, congrats to you, because you'll still be making money at this point anyway. All right, so if we take a look at this, we can see that around November, something happened here and it went from $2 per share. And I'm laughing because I know how much this is. It's just stupid. It went from $2 per share all the way up to whatever that is at the top there, $27.96. So that is a huge increase. It's a $25 increase. It is massive. So the fact is, this happened literally within a couple of months. So guys, we can basically see that this happened within a couple of months. Look at that. I mean, it went from November to February. That's 4 months. And it's up that much, like over 1,200%. That is insane. So yeah, I was definitely short in this stock on the way up. And I couldn't even bring myself to go long on it, even on a short-term basis, because I just thought how stupid it was. But it seemed like it was going to the moon. And at the time, everything was going to the moon, like all stocks in the NASDAQ, and the NASDAQ was breaking new highs and it was going up massively, so fast. And if we look at Plug Power, it's even more evident the bubble on this, because if we look at the 1-year chart, like literally it was growing like fuel cell beforehand, but look at this, guys, it goes up like literally 116% in the period of a week. Are you kidding me? And then basically what's always indicative of these bubbles is then like it gets to a certain price and people just kind of think, hold on a second, like what is going on? And people kind of hold off. They take a step back. They think this is crazy. And the same thing happens in real estate markets, in any asset class where you've got humans buying it and it's based on supply and demand. Because essentially it gets to a certain price and people are just like, what is going on? And it rises so fast that people are like, what is going on? And there's usually something going on. It's usually mass speculation. You get up there to the top and then it does drop. It drops about 13.5%, and that happens in 2 days. That's quite a substantial drop there. But the thing is, you can see it pulls back and actually breaks a new high. Now, this is very, very, very common with bubbles that you see this. And let me explain why this works. And I explain in psychology, because investing is completely psychological, I believe. And I only really believe in fundamentals and psychology. I don't believe in technical analysis and all that kind of stuff. I mean, some certain things like support and resistance, yes, but nothing major. Like, you don't have to overcomplicate things. You really don't, between the balance sheet and what goes on the price action. So anyway, you get to this top. So why does this happen? Why does it go down? Because why doesn't it just collapse from there and just go straight down? And I'll tell you why. Because what happens is people see the price going down and they think, here's my chance. They clap their hands together and they think, here's my chance to get in the market at a decent price, or so they think, a decent price. And then, of course, the price does go up and it's kind of confirmed to them. They're like, oh yeah, I made the right decision. And then it pulls back. And it doesn't pull back to this low here, and then there's another blip. And all these blips they're people trying to buy the dip, and it can go on for a long period of time. We're going to discuss another stock where that is going on for a long period of time right now. But I believe we're about to see this pattern play out here on the downside. Anyway, it does this final pullback and then it just kind of collapses. And if you notice something, the rise here in the bubble was actually quicker than the decline. And that does happen because, unfortunately, people are very, very naive when it comes to investing, and they think that if they hold for long enough, if they just keep holding out, that they'll be okay. And it just doesn't work like that. And this goes, it's not just retail investors, people at banks and people at hedge funds also think this too, because in the financial community that I'm part of several, but one of them, and there's people who own hedge funds in that community, and I've spoken to them about it, and they say, yeah, that they deal with the same thing with their floor traders that do these things, and they're using hundreds of millions of dollars and sometimes huge amounts of leverage. So basically, the consensus here is that we all suffer from the same issues. And this is why I go against the current always, because you have to be different if you want to make money in this game. You cannot just read the news, buy stuff because it's high. But anyway, I'm digressing. There's going to be many more videos on other things like that. But anyway, you have this slow decline. So how would I know when the price has gone up this much? So let's say we're sat on January 13th. It's January 13th. This decline hasn't happened. And I'm thinking, oh my God, am I missing out on the best thing in history here? So we head over to investing.com, because investing.com is really easy to just see the earnings, and it just has them laid out nice, and it's just easier to see it. So we're going to put in Plug Power in there, and we're going to bring up the earnings. So if we go to earnings, and this is just a quick way, a lot of the time I go to the balance sheet and more in depth, and let me know if you want to see a video on that. But at this point, I don't think the channel's big enough to warrant a in-depth video like that. But if you look here, the earnings are all over the freaking place. I mean, literally, you got, and remember, we're in January, so we can't see this huge loss in February right now. So all these, they're, I mean, 106 million. Yeah, that's a beat. That is higher. That's quite substantial, like 35% higher than there. But then again, you've got 91 million here. So it's not unusual for this company to report that high, and that's not that high compared to the market cap. The other thing I'm looking at is the abysmal EPS here, which is earnings per share. And if you look at that, and this is why I like investing.com, because it just puts all the earnings, bam, so you can just see them very easily and just kind of go, is this growing? Is this not growing? Is this a Ponzi scheme? What's happening? And you can see that it's too hard to decipher. And these earnings are nothing when it comes to the market cap that it had at one point. So we would rate this a bubble for sure, and we would not be buying that. But that doesn't mean that you can't short this when it all starts to go wrong, because what you look for when you're waiting to short these bubbles is you want it to pull back quite substantially from that massive move higher. You want that big pullback, but then you want it to go up a little bit, and you want it to retest that high again, possibly make a new high, and then come back down, but not as low. And then it's like a head and shoulders pattern, but I don't really use technicals, but that is essentially what it will kind of look like. And that's essentially to do with the dip buying and everything like that. But where you really want to catch it is when it breaks the low, because if you look here, it doesn't break that low until it actually just starts crashing. So yeah, but anyway, let's look at Tesla. Now, Tesla is a very, very hot stock. Obviously, we know this, and this has a bigger market cap. It has more liquidity, and this has a bigger market cap. So everything is going to happen slower than we saw on Plug Power, which kind of acted like a penny stock almost. And basically, how do we tell this is a bubble? Well, I'm on the 5-year chart now, not the 1 year, because like I said, this is going to happen a lot slower than the Plug Power thing. So basically, but look at this, guys. Doesn't this pattern look familiar? It looks like the plug pattern. It's the same thing. We've got this huge rise, which happened here around November. I mean, this was stupid anyways, this rise from March, but this was kind of, every tech stock was doing this. So yeah, I mean, it is what it is. And now they're all selling off, go figure. If you look, here's that time where it goes to the moon, and it happens from November to January. And it was because of the S&P inclusion news. And basically, guys, you can see that there's that huge rise once again. And there was news of S&P inclusion, but S&P inclusion doesn't add value to a company. Like, if you look at past S&P inclusions, I think during the dot-com boom, it was Yahoo that got added to the S&P and then quickly subtracted within a couple of years. And you know, the price was doing a similar thing to Tesla, and it was kind of like Tesla. And of course, Google became the #1 search engine. But if you look at this, exactly the same thing is happening, guys. We're seeing this same thing, this same pattern where it's going up massively, it goes down. This time it tries to test again, or it's testing up here, and it doesn't even make it. So like, you can literally see that dip buy here, which happens very quickly, and it did there. That was a month. The other one was a couple of days, but like I said, this is over a longer period, and then it goes up. But this one, it didn't break a new high. It actually just collapsed from there. But again, when that pullback happened from the dip buy, there was a big crash. So this is like a familiar pattern, isn't it? And then you've essentially got the same thing happens. And there is a lot of people trying to buy the dip on Tesla because it is a very, very emotional name for investors. And people are thinking, but the thing is, most people investing in Tesla, they don't pay attention to the fundamentals. And the fundamentals are its earnings. What's it doing? What's it producing? How much is it selling? And they are going up. And that kind of misleads investors, because I see it on the forums all the time when these people are getting slaughtered. I tell you, it happens every time, yet people make the same mistakes. Like, earnings comes around, Tesla might beat completely on earnings and the stock goes down. And that's because it's not enough to warrant the valuation that it's got. And in banks and stuff like that, you have risk departments that are looking into all this stuff. So it's not going to be as straight as, oh, just because the future, everyone's buying the future. It's not like that. So anyway, let's look at their earnings and see what's happened since their stock went berserk and we're looking at this point, November to January. Okay, so November to January. So where are we? So we've got October earnings here. So they came in 8.77 billion. And you can basically see, okay, so the stock has, it's gained, I mean, their revenue has gained about 20%. It's gained about 20%. So that's good. It's growing. It's definitely growing. They've gone from 2.7 billion 4 years ago all the way up here now, but the stock has been growing as well, but now it's just got stupid. So you basically, again, you've got this bubble because the 20%, how much did it move up? Well, it actually moved up 109%. It just makes me laugh because I don't know how people like don't see this. Like, it's almost like they're blinded by greed and they just think, oh, money, money, money. But when it comes to everything, I always say this, you have to think of it like you need an exit plan before you need an entry plan. What do I mean by that? When you're looking to buy a stock, you want to be looking at your exit strategy before your entry one. And the key point is, because if you can't decipher where the hell, because if you buy on this rise, like you're literally trying to predict the future because it's an all-time high price. Like, so how are you going to predict where it goes from here? So where do you put your stop loss? Like if you buy here at 705, like your next line of support is around this 410 number. And even that is completely astronomically overvalued because 2017, what did we say their earnings have like tripled or whatever? Well, the stock is up 1,800%. So if we get a calculator out there, and don't get me wrong, there are stocks where you're going to have them where the growth of the stock is ahead of the actual fundamentals. But at the end of the day, the institutions and banks, when it really boils down to it, they buy based on fundamentals of what the company's doing. They don't buy based on hype. Well, they sometimes do, like I said, with hedge funds and stuff like that. But they're mainly doing that for short-term trading and stuff like that, like this S&P thing. And that's why it's gone down so much. And it's probably just leaving the bag holders. But anyway, guys, I hope this video was somewhat useful to you. I really do. I'm just trying to publish these videos out there to help people. I just see people getting slaughtered in the markets every single day. So I hope this video helped you. If it did, smash that like button. If you like this kind of content, we're going to be moving on to risk management, I think, next, because that is the most important thing, I believe, when it comes to trading is risk. But anyway, guys, I just want to thank you for your support. Thank you for watching the video, and I'll hopefully see you in the next one. Take care, peace and love. Bye-bye.